Hello, and welcome to another update video about Solana. I don't want to take too much time here on the 4-hour time frame. I discussed that in yesterday's video in detail. If you're new on the channel and you want to get a better idea of here the primary scenario on the 4-hour time frame as well as the relevant alternatives, because that hasn't changed since yesterday, feel free to check out yesterday's video. Today I just would like to jump into the shorter time frame price action straight away. Just before we do that, quick reminder that $119 is the key invalidation point for the Elliott wave triangle I'm tracking here. I mean, the idea that this is a fourth wave has been with us now for several months. And that analysis is still very consistent with previous updates, but below $119, the focus has to be on some of these alternatives I discussed also in yesterday's video. So we are taking a look at the smaller time frame. This is obviously a triangle A, B, C, D, E, just so that everybody is on the same page. The idea is that we could have started that D wave, okay? Now, these triangles often shapeshift, okay? They can easily change in structure. So all the micro patterns we discuss here, but really that's all we can discuss because not much else happened, but all these micro patterns we do discuss here, well, they can really only allow us to identify like tendencies, and we just need to understand they can be really, fragile. But if we can identify a 5-wave move even within a larger corrective structure, well, that's something noteworthy because it can provide us with a setup. So obviously, if the idea is that a C wave finished, that's basically the third wave within a 5-wave triangle, that a C wave finished here on Friday, the 5th of July, then we could be open to the idea that a D wave is unfolding. But we talked about that already a few days ago. I think already on the weekend, I posted, we're now on Discord, I posted that the price is trying to form a healthy D wave together with obviously the explanation. But you can see that we were already able to identify here this 5-wave pattern to the upside in wave A. And I provided a support zone for wave B, which was slightly adjusted higher actually. Just by a couple of dollars later when the A wave formed the top. But the idea was, okay, we could identify a 5-wave move up, so we can generally keep the door open for higher prices. Obviously, there's going to be like a trading area or support area that should support the price in the pullback. But these are the parameters that we can then watch and that we can use for stop losses and whatever. But the idea is that, okay, if we get that pullback, there's this orange small area that the price should use for a reversal. And I just want to illustrate that because it illustrates why it's so important to watch for these 5 waves. Whenever we get a 5-wave pattern, the pullback can be an opportunity. Okay. Now, if we go back to the live chart, that's what we've seen here. We've seen actually this 5-wave move complete. We had that corrective pullback and now a reaction. Now, the problem with this is, yes, we had a reaction. I would say this was a successful reversal, even if only temporary. But the warning that I've been issuing basically since these reactions here on several charts, this reaction isn't impulsive. So it's not easy. It's not an easy ride. It's going to be a rocky road if we go higher. Now, if we don't go higher, then this support area is still relevant. But obviously, in an ideal Elliott wave world, what you would want to see is something like that. A, B, and then the C wave rally. But the C wave is ideally impulsive, so ideally we see another 5-wave move up. Now, that's not what we see here. There is no 5-wave move up, which means this requires, again, a lot of babysitting, which is what this entire structure does anyway, because we're dealing with a larger, let's say a larger corrective structure, right? So, however, I can tell you that a C wave, if this is a C wave to the upside now, the invalidation point for that scenario is the B wave low. So you have a key level here against which you can measure your risk. That's the $128 level. And if the idea is, okay, maybe within that C wave we already had a 1-2 setup, which is not reliable because again the wave 1 is only 3 waves, but it could be an ending diagonal, this move up, then the key level would be $133.70 pretty much. But yeah, it just means we can't trust this move because we're dealing with corrective action from the low. So that might mean, okay, trade smaller or take already profit, or definitely have your risk management spot on, because there's a risk we come back into the support region. Why is that the case? Well, because we haven't got 5 waves up. Only if we get 5 waves up from a low, we can add the next support zone, really. And I haven't got that. So that means there are a few options now. For example, it could just carry on like that in the yellow wave count in an ending diagonal. I'd like to get the price into the $160 region, actually, in that scenario. It is also possible that this D wave, the healthy D wave of this triangle, forms a WXY structure. Then this Y wave could form an ABC structure, even though it's not entirely clear how that would look like. But then we also have to expect a deeper pullback. But again, it shouldn't really break below that $128 level. So the other option I see is that we haven't actually bottomed in wave B yet, and we're forming a wider flat correction. That's all possible, which is why I say often, you know, don't trade the wave count, trade the levels. So all of what I just told you is irrelevant if we just consider the levels, because as long as these levels are holding, we could keep a door could keep the door open for higher because of the initial 5 wave move up. Now I know that a wave W can't be a 5 wave move, but you could make a case for an ABC in wave W with a short C wave. But anyway, bottom line is the microstructure here is not so relevant. What really matters is the main support at or the main support zone. Keep watching the fibs, because there is a high risk we get back into the support region. Below $125.81, however, the overall idea that a C wave finished on the 5th of July gets very, very questionable. That gets challenged, and we might then test the invalidation point at $119 of the larger pattern. So lots to talk about the microstructures, but they change quickly, and I can tell you they are not trustworthy because there is a lack of impulsive structures, and therefore the Fibonacci support zone remains relevant. And I'm still watching for a clear impulse to the upside, but we might not see one because we're just dealing with, you know, patterns within a large correction, which basically is this triangle. So I think I would keep the door open for higher still. But there are 2 key levels that I mentioned, like $134, what is that? $133.70 and $128. Below them, a break will already become more likely, but then we still have the fib level at $125.80. Okay, so that's my update about Solana. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.